Hello, my name is Justin Urquhart Stewart and I'm from the investment platform Regionally. You're very welcome, and this is my often sort of brief on what's happening in the markets at the moment. And after all, there is enough going on, isn't there? Well, particularly with your election coming up, some issues I think we need to be taking account of. Not so much domestic ones, you'll know all about those. Let's look a bit more internationally. The issues relating to China, obviously very sensitive at the moment politically, but also very important in terms of trade. Look at next year's growth figures around the world, and you'll see that China's bouncing back already quite significantly, and next year I think will be really pretty positive. That will have an impact. Now, depending on what happens in terms of the election, when we finally know the result, that could take some time, a Biden win was very likely to actually be very positive in terms of attitudes from China. So there, in terms of a currency, you can see the Yuan actually gaining strength, which it has been doing so already. The Chinese will try and control this, of course, but there's going to be some upward pressure there. And you'll see some market movement as well. Please be careful of Chinese markets. Remember, there is no such thing as an independent Chinese company. At some stage, the Communist Party, I'm afraid, is involved. It may sound a bit old-fashioned in its style. That's because it is. But nonetheless, that's going to be an interesting issue worth looking at there. Because what we are going to be seeing is there will be another stimulus package will finally get agreed and put through, whoever has actually finally won. And of course, that is one of those issues which the market is very positive about. Like all those things, once it's gone through, then there's going to be a level of cynicism. So I can expect some optimism, which will be hitting the markets continuing for the moment as we see that package coming through. When the package is there, I think there'll be a level of concern about actually, well, what happens next? Where does the growth actually come from? And I think that's going to be an issue for next year. One issue to look at the moment is with regard to the banking sector. You're right in the midst of all the banking results. And see how the banks have changed. Normal commercial banking having a terrible time because the margins aren't there at zero rates or even negative rates. However, what you will be seeing is much more mergers and acquisition activity. That means more fee income. You're going to see more of those banks actually seeing mergers, particularly of their wealth arms. A few years ago, none of them wanted to be involved in wealth whatsoever. Why? Because as far as they could see, there was far too much regulation, not enough margin in it. Now they can see actually if the margin is actually coming back, there's much better fee income, regular fee income there, and you're going to get greater economies of scale. We've already seen some mergers. There's going to be some more of that carrying on. So although the banks themselves, traditional banks, are going to be suffering, look at actually what's going to be happening in terms of one, mergers and acquisitions going on, and two, the fee income generated by that in terms of other parts of the market. Because that's going to be a key issue next year. As companies realize they're going to have to significantly restructure, they're going to sell off various elements. So look, therefore, for the special acquisition vehicles as well, or special acquisition companies, SPACs as they're called. Look at those, look at the companies they're buying. Now, you've got to be very careful with that because they're as good as the businesses they're buying. Don't just buy them just on the basis that they're a good idea. They will be buying some good assets and some rubbish ones as well. Find the ones with good assets and you'll be buying into assets at a cheap price. This is going to provide us with a great opportunity. You don't need to rush into this at the moment. Have a look at those SPACs, see what they're buying into. Most of them will be very happy to tell you because they want the investment money going into there. And I think that's going to provide a great opportunity for next year. So shorter term, get this wretched election out of the way. Get the package coming through out of the way. There'll be a level of disappointment afterwards because everyone will think it'll achieve so much more that it frankly probably won't. But what you're going to see, therefore, though, is much more corporate activity coming through. That's, I think, where we should be trying to concentrate on. So in the meantime, keep your cash together. You're not going to be making money on any interest rates at the moment with negative interest rates effectively there. So I'd be building up my cash positions ready to deploy. Am I going to be putting more money into the markets right at the moment? No, I won't, because there are too many variabilities in there. Variabilities can be your friend. Use it to your benefit rather than necessarily actually just sitting there and waiting for the perfect time. So use those variabilities and watch out for those corporate moves next year. That's where some really decent money is there to be made. Good luck to you. Enjoy your election. I shall be watching with some interest and just hope we finally get a result one day. Goodbye.